Good morning, team. It is Tuesday, April 12th. Thanks so much for joining us. I'm Amy Corr, and I'm joined by Kevin Vanek, and we are out of our Goose Island studio. We have been talking with a lot of you, and we know the market is busy, it's crazy, there's lots going on. So let's talk about that again today. Grab your double dose of coffee. I've got mine out of my opportunity mug this morning, and let's jump into the latest episode of Coffee with Amy and Kevin.
That's right. Good morning, everybody. We've both had a lot of coffee already this morning, and I'm so excited about this episode. My right eye is tearing up. We have talked to a lot of you over the last 2 weeks, specifically after last week in Amy's video solo. And what was great about it, hearing from you, is what's happening in the market, specifically when it comes to rising interest rates, when it comes to appreciation in the market, when it comes to running around and that thing we keep talking about, which is the lack of inventory. So we're going to go back to basics. We're going to talk about two different things today, really focus on them and something you could do to be able to continue creating success despite the fact that rates are rising, so understanding what impact that has or hasn't had in the past, and also how to be able to create success for your buyers that might be struggling with the low inventory problem.
That's right, Kevin. So the first thing that I want to focus on today is talking about being the trusted advisor. I know we talk about that a ton, but I really feel like now more than ever, we really need to be thinking about how we're guiding our clients, our buyers, our sellers, but even just informing all of those people who are in our sphere of influence, because there are a lot of interesting dynamics that are going on in the housing market right now. And I know last week we touched on some really great information from Keeping Current Matters. It is an incredible resource, you guys, and if you have not become a member, I highly encourage you to think about signing up and getting their monthly newsletters, but they also have daily blogs that just give some really great insight into what's happening real time in the market. But today I want to touch on three things quickly. The first thing is I want to talk again about impact of rising rates. I think we are seeing them over 5% very recently, which I know is a huge jump in comparison to what we've been used to. But let's keep in mind, 5% is still a pretty incredible rate when you look at things historically. I know that my parents, when they bought the home that I grew up in, the rate was at 19%. So we've got to put this in perspective. But I think what's so important for us to realize is that we may continue to see rates rise a bit. I think we're going to see them kind of bumping along, but regardless, they are increasing. But what I also want you to think about is that the impact of rising rates does not necessarily mean that prices are going to slow down or it's going to pull buyers off of the sidelines. And what I've got for you is another great slide from Keeping Current Matters. We're going to pull it up here, but it talks about the impact of rising rates on housing. And it shows you historically some of the times where rates increased over a year to an 18-month period, and the fact that home appreciation still was pretty solid. So a good example of that was between 1998, the fall of 98, to May of 2002. We saw rates go up to 8.52%. So the rate you got on your house was 8.52%. It increased over that year period about 2%. So it moved on up. But more important is the fact that houses appreciated within that period of time 13%, a pretty decent number. So what I want you to understand in looking at this information is that just because rates are going up, that does not mean that the market's going to slow down and buyers are going to stop buying. I still think we are going to see a lot of people who are going to be jumping in. The second thing I want to talk about is home prices. Last week I touched on this in our newsletter, but I am still a big believer, given all of the data, that we are going to see a strong 2022. In fact, we are going to continue to see that prices are going to be moving up and that we're going to see appreciation. The second slide that I've got for you here shows an example of what we have economists in the market who all got polled. They actually were polled from the Home Price Expectation Survey. They had over 100 economists who were polled for this, and what they actually had said is that on average, these individuals see an increase over the next 5 years in home appreciation. The example in this slide shows a house that's purchased for $360,000 in 2022. By 2027, it's going to be worth just over $450,000. That's $90,000 of appreciation in 5 years. pretty impressive. So think about how that's going to correlate in your market. And then the third thing that I want to talk about is inventory. I talked about it last week and I want to talk about it again. And that is the fact that the biggest thing we should be looking at in this market that's going to indicate if we're going to see a softening is month supply. And right now we are at record lows of month supply of inventory, but I don't think we're going to see that changing anytime soon. We've got a big push with millennials getting into the market. And right now, the slide I'm showing you, which is single family housing units completed, you can see in this slide, it is showing that we are at an all-time low over the last 14 years with the amount of new homes being built and coming into the market. If you see the bars that are in red, those were actually the single family home numbers right before the recession. So what is that telling us? We've got low inventory, and even though new inventory is coming into the market, we are at a 50-year average low. So it's going to take us a little while to build that inventory up. And while we have low supply, we're going to continue to see home appreciation, and we're going to see a lot of those buyers continuing to compete. So the most important thing to remember is these three stats and these slides are great things for you to be sharing with your clients. Remember, you need to be the trusted advisor. You need to help them understand what's happening in the market because there's a lot of noise out there. But if you can give them really good information, it's going to allow them to make great decisions on their largest financial asset.
That's really great. Those are good. That's good points of info to be able to share because it does allow you to become an advisor, right? What we always talk about, the cliche, be an advisor for your clients. This empowers you to do so with real data. So I love those graphs. You'll see them in the email as well, so you can download them there and use them. Continuing on the same line of being an advisor, how about reframing the perspective of your buyers? We can advise that our buyers change the way that they're thinking about the market. And you can use the data that Amy just talked about and use those graphs. But also there's key talking points and ways to work and operate to maybe find them what they're looking for. So let's be real. The market right now is not what it was pre-pandemic. The inventory levels are not there. But what maybe hasn't changed, even though the market has, are buyers' desires, their wants and needs, and their desire to have that perfect unicorn property. In the past, there maybe was more inventory where they had options they could choose. There were plenty to choose from in some cases, in some markets. Now that's not the reality. So maybe we need to reframe for our buyers what they're looking for, understanding that maybe they're not going to find that unicorn with all of the wants, but let's start looking at what they need. And here's the bottom line with everything we're about to share, which is if your buyer isn't participating in the market, if they're not playing, then they're not going to win. And so what Amy shared about what we can anticipate for appreciation in the market over time, they're not going to be able to take that. They're not going to be able to take, I think it was $360,000 was the purchase price. By 2027, it's going to appreciate by nearly $100,000. If someone's renting during this time versus participating in the market, they're not going to be able to realize those gains. And so, number one, reframing your buyers into there are no unicorns out there. We already know this. If you're a ninja, there is no perfect property. There is the 85% property. The next would be, let's think about looking outside of the boundaries. A lot of times buyers, whether it's location, whether it's condition, they set up boundaries that may be realistic in certain markets, but not necessarily realistic in this market, but open up because there may be a property in a neighboring community or a different community that fits. There may be a property in a different price point. Let's think about this. We've really been pushing the limits on appreciation and how much we're willing to finance and debt we're able to take on because we're scared. Let's go back to affordability. If we talk about looking under the bridge, looking under the price that your buyer is looking for, they are going to be the strongest buyer in that market. They're going to be able to write the strongest offer out of everyone else looking in that price range. So talk with your buyer about that because again, if they're not able to find a property in the high end of the price point and they end up renting or staying where they are, they're not necessarily going to be comfortable and they're not necessarily going to be able to win and realize those appreciation gains. So bottom line, think outside of the box. Think outside of location that they've told you. Think outside of the price point that they've shared with you. Think outside of the condition because it may make sense, especially with the anticipated appreciation, if they can rehab, remodel, update, that could be a huge win for them because we're still seeing people able to do that. In fact, here's a side story. There's a property that I had been following, and it's in Florida. And when I saw it on January 1 of 2021, it was January 2 of 2021, that property was listed for $899. It has sold twice since, most recently this past week for $2 million flat.
Wow.
I won't tell you the rest of the story about a missed opportunity or whatever else however I'm feeling, but that's a real story. If your buyer's not participating in the market, they're not going to be able to win. And our goal, of course, is to help advise as to what's in the best interest of the buyer. And we never want to push them into anything, but we need to use the stats and data that Amy showed us, and we need to have the talking points to be able to open up the opportunities so that our buyers can make an educated decision as to whether they jump into the market or not.
Yeah, that is such great advice because I think all of us sitting here can realize for so long it was kind of a buyer's market. So this is a really hard and different shift. And I think everyone, maybe even us including, we're kind of thinking, how long is this going to last? And I think what we're really trying to provide you are a lot of those talking points to show that this market has some momentum. It's got some legs, and I think we're going to see this for a while. So this is kind of our new norm. So it's time to figure out how do I operate within this new norm. And we really want to encourage you to use the data, work collaboratively with each other. And, you need to just be that trusted advisor, but it's just not giving your opinion. It's being able to have some of this data to really back up what you're saying. So on that note, we want to hear your successes. Tell us about the conversations that you're having with some of your clients. Use this information and post it on social media. Make sure everybody out there knows that you do know what's going on in the market and you're going to see some success. And please share with us. We want to see how it goes. But until then, make it a great Tuesday. We'll look forward to seeing you next week. And remember, you got this.